I ran 5 tech stocks through NVIRA, under 1 minute each. I know, hard to believe, but that's the truth. You see, Palo Alto, up 63% year to date. NVIRA says 73% overvalued. ServiceNow dropped nearly 40% by April, now clawing back, still down 25% for the year. NVIRA says 37% undervalued. Salesforce, fair value $359, trading at $209. NVIDIA, ROIC 113%. The only wide moat in the group, trading right at fair value. Arista, net margin 39%. Nobody's talking about it. Fair value. Moat score, smart money, momentum signals, all 5 stocks, all in one platform, and I'm going to show you right now. Before we get into it, quick bit of context on why I made this video. We're at the start of June 2026, and honestly, it's been one of the strangest years I've seen in tech investing. Some stocks are up 60%, some drop 40% and are still recovering. And if you are just watching the price move, you're really only seeing half the picture. Because here's the thing that trips most people up. Price going up doesn't mean the business got better. Price going down doesn't mean something's broken. Those are two completely different things, and a lot of people mix them up. The real question, the one that actually matters, is what is this business genuinely worth? And is the market getting that right? That's what I built NVIRA to answer. Alright, let's get into the stocks. Starting with the one that surprised me the most. And I'll be honest, when I saw this number this morning, I had to look twice, because it's gotten worse since yesterday. Palo Alto Networks, up 63% year to date. Just today, it jumped another 6.67%. RSI sitting at 84.5. That's deep into overbought territory. Meaning, the stock has been bought so aggressively in the short term that it's statistically stretched. Golden Cross formed on May 28th. That's when the 50-day moving average crosses above the 200-day. Traders typically read this as a bullish confirmation, and sure, the price chart looks great, but then I open the IV engine. Fair value, $173.21. Current price, $300.48. 73.5% overvalued. Let that sink in for a second. NVIRA's model is saying you're paying $300 for something worth $173. That gap, that's the number that made me stop. The IQ score, which is NVIRA's composite signal combining business quality and valuation, comes in at 5.0 out of 10. Signal, hold. Even though the business itself is decent, the price is pulling that score down hard. Is the underlying business actually good though? Yeah, it is. ROIC, that's return on invested capital. How efficiently the business turns money into more money is 15% against a WACC of 8.1%. WACC is the cost of capital. When ROIC beats WACC, value is being created, which it is here. Revenue up 14.9% to $9.2 billion. Free cash flow $3.47 billion. That's real cash left over after all the bills are paid. But look at this number. The opportunity dimension inside the IQ score is 1.0 out of 10. Bottom of the group. What does that mean in plain English? The market has already priced in almost all the future upside. You'd be paying full price. Actually, 73% above full price for a business with very little room left to surprise you positively. Moat, narrow at 6.8. The platformization strategy, consolidating security tools into one, creates real switching costs. But narrow means these advantages need constant work to maintain, not a fortress. Prism signal. NVIRA's technical and momentum composite says hold at plus 25. Direction bullish, but momentum and timing both bearish. Conflicting signals. Even the algorithm is saying, not clean enough to act. Palo Alto, healthy business, strong momentum. But the price has run so far ahead of the fundamentals that the valuation gap concerns me more than almost anything else I'm looking at today. Okay? NVIDIA. I know. Everyone wants to talk about this one, and the numbers are genuinely extraordinary. Revenue, $215.94 billion. Up 65.5% in a single year. That's not a typo. Net income, $120.07 billion. Free cash flow, $96.68 billion. For context, most Fortune 500 companies would be thrilled with $5 billion in free cash flow. NVIDIA generated nearly $97 billion. These numbers are almost hard to process. Now, IV Engine, fair value $223.18. Current price $224.36. IV gap just plus 0.5%. Invyra calls it fairly valued, and I think that's genuinely interesting. Most people expect NVIDIA to show up as massively overpriced, but Invyra's model is saying the business actually justifies almost exactly this price. That's not nothing. IQ score, 7.2 out of 10. Buy signal. Moat, wide, 8.4 out of 10. The only wide moat in today's entire group. Wide moat means NVIDIA has competitive advantages that are extremely difficult to replicate. CUDA, their computing platform that the entire AI industry runs on. Data center relationships built over 15 years. The developer ecosystem. You don't rebuild that quickly. That's exactly what wide means. ROIC, 70%. WACC, 15.5%. I want you to sit with that for a second. Every dollar NVIDIA reinvests earns roughly 4.5 times what it cost them to raise that dollar. Durability score, how resilient the business model is a perfect 10 out of 10. Efficiency, 9.6. Prism, accumulate, high confidence, plus 28. Strong uptrend. The 50-day MA is above the 200-day. That's a confirmed bullish structure. RSI at 53.9. Neutral, healthy, not overbought. MACD slightly bearish short term, but the overall confluence is bullish. This is actually one of the cleaner technical pictures in the group right now. A business trading at fair value, with a wide moat, strong uptrend, and neutral RSI. The algorithm says accumulate. The fundamentals agree. Arista Networks, up about 7% just today, the least discussed name in the group, but when I pull it up on Invyra, the quality scores genuinely stand out. Revenue $9.01 billion, up 28.6%. Net margin 39%. To put that in context, net margin is basically how many cents of profit the business keeps for every dollar it earns. At 39%, Arista keeps more than a third of every dollar as pure profit. Higher than Palo Alto, higher than ServiceNow. For a hardware-adjacent networking company, that's impressive. Free cash flow, $4.25 billion. ROIC, 30.6%, against WACC, 13.5%. Big spread between return and cost, meaning real value creation. IV Engine, fair value $138.01. Current price $170.68. Premium, 23.7%. IQ score, 6.5. Still a buy, and here's why that makes sense. Invyra's IQ gives 55% weight to business quality. Efficiency, 9.8. Momentum, 9.5. Two of the highest individual dimension scores I see anywhere on the platform. The quality of the business is pulling the IQ up even while the valuation premium pulls it down. For a long-term holder, that trade-off makes sense. But here's the flag I want to be honest about today. Smart money, minus 30. Bearish. Insiders and institutions are net sellers right now. This is new since yesterday, and it's worth paying attention to. Smart money doesn't always get it right, but when the people with the most information are selling into a 7% single-day move, that's a data point I don't ignore. Moat, narrow 5.8. The EOS software and switching costs are real, but competition from Cisco, Juniper, and hyperscaler custom silicon keeps this moat from being rated higher. Prism, accumulate at plus 35. Direction and quality bullish, but RSI at 78.5 and Williams %R sending a strong sell signal technically. The stock is running hot short term. Arista is a genuinely high-quality business in the AI infrastructure space. But today, with smart money turning bearish and technical stretched, I'd want to see the stock breathe before adding. So, that's Palo Alto, NVIDIA, and Arista. But in the next part, I'm going to show you two of the most famous names in enterprise software. They are Salesforce and ServiceNow. When I pulled up the data, what I found completely changed how I was thinking about it. If you want to run this on any stock in your own watch list, Invyra is free right now. No credit card, no commitment, just go try it. Link is in the description.